Hi guys.
My name is Mikhala Barasa.
My name is Ndanu Nzyuko.
And welcome to the rundown. So, a little bit about ourselves. I am a legal expert dealing in NGO and financial services law at the moment, and
I am a risk management and compliance specialist. My background is mainly in the insurance and investment industry, so I have a bit of knowledge in risk management and compliance in the financial services industry.
okay, in today's episode is going to be on the tax considerations when you're opening or starting a business in the Republic of Kenya. So, Ndanu, start us off. Let's talk about the first thing when you're trying to come up with a business, the registration part. I'm sure this determines what kind of tax you are going to pay. And maybe you start us off with corporation tax and what it is.
Okay, all right. So basically, as Mikhala has mentioned, depending on the type of business registration that you've done, that's what determines the type of tax that you'll pay. So there are different types of taxes that apply to local and foreign companies that are operating in Kenya. So for local businesses, they pay taxes of 25% corporation tax. And then for international or the foreign businesses pay 37.5% of their turnover. So basically, the corporation tax is a type of income tax for the business. So you're supposed to file the return after, on or before the 6th month or at the end of the accounting period. So for example, if your year runs from Jan to December, so by June of next year, you should have filed the returns. So that's filing. Okay. So there is now the paying. Okay. So you need to pay at least every quarter by 20th of the next month. You need to pay in installments the corporation tax that's applicable to your business. So that's for the 4th, 6th, 9th, and 12th month. Yes. Yeah. So you need to make sure you've paid all those installments for your corporation tax.
Yeah. And I think the additional thing about corporation tax is because we're talking about different registrations for different entities, like partnerships. I've been in partnerships before.
Yeah.
We basically don't pay corporation tax, and that's why I think a lot of people say open a limited liability partnership. You won't be paying corporation tax. But that's a topic for another day.
Yes.
But corporation tax is mostly for corporates.
Yes.
Partnerships don't pay corporation tax or corporate tax.
Yes. And even when you've registered a business name.
Even a business name, you don't pay corporate tax on
Yes.
business.
Because with business name, it's basically you and the company are the same person. So you really don't need to
pay,
yeah. So when you're filing your own taxes, then that is applicable to the business name that you've registered. So limited companies are the ones that will pay the corporation tax.
But there's something, I don't know, there's something that KRA is doing this year. Maybe we need to look into it. That is going to kind of force a lot of businesses to register as corporates so that there is compliance. I don't know what it is because I have had consultations around it. That's also something we need to put a pin on and maybe discuss it in one of the subsequent episodes.
Okay, I think we'll keep researching on it. That's why we are here. We will need to give you information even as we keep learning about tax compliance in Kenya, because I think that's a really big thing. Currently, with our current government, as you know, they are looking for revenue everywhere. So we need to make sure that we are compliant with our taxes, make sure that we filed the taxes correctly and we pay the taxes that are applicable to our businesses. Because the one thing you need to remember about KRA is they have compliance officers on the ground everywhere. Yes. Yeah. So because they are camping to understand what how much different types of businesses earn, so that they are able to enforce the revenue collection across the various industries, especially in the informal sector. You know, it's easier to levy taxes on the structured corporates. But as you know, in Kenya, about almost 50% of our economy is informal sector. So that 50%, they want to know how to,
to get. Even the difference in the enforcement, like with corporates, it's easier for you to go and talk to KRA and say, by these are my tax obligations. This is what
Yeah.
I can pay within this period.
Yes.
But now the informal people, those are the people that get sent to compliance officers to come and say, why is this an M-Pesa shop and you're selling braids?
Yeah, I
Like,
know.
yeah, that's
Yes.
harder for them.
Yeah, and I think that's a whole other topic on its own.
Yeah.
In terms of registration of a company. When you've registered a company and you say that this is what the business that my company is going to be doing, or this it's going to be a retail shop, and then you're found offering services, that's a whole other different type of topic we need to
Yes,
talk
that's a
about,
whole different
about
conversation.
business registration. Yeah, let us know if you're interested in that. Yeah.
Okay, secondly, maybe we talk about income tax. And income tax, the challenge with income tax is even corporation tax is income tax. So there are
Yes.
different sorts and forms of income tax that a business can pay. I know like businesses now are paying taxes, income tax on dividends. They are paying income tax on pensions.
Yeah.
We pay income tax on services in the digital marketplace. This is what the influencers were crying about the other day.
Yeah.
Income tax is also paid on, you are now the company's income. I've opened a company, this is the income you're making. So with income tax, you're allowed to remove your expenses. So take out your expenses and say, this is the income I make in a year. Then you pay your taxes on that income. Then there's the big bad wolf that is called payee, that employees pay. So if you have employees in your company, of course, obviously, you are going to be paying payee.
Yeah.
So again, this is something that you need to deeply consider as you open a business. And you need to know at the end of the day, all the income that you're making, all the income for services, for whatever it is, professional fees, whatever that is, there will be some sort of income tax that you pay on it. Oh, I had also forgotten about if you're building or deciding to own rental properties, there's the rental income tax, which again KRA have been really cracking down on. Yeah, so those are some of the income taxes that you might be required to pay.
I think maybe the thing that KRA probably needs to clarify to landlords on is on the rental income tax. So you find, for example, you have a tenant who delays in paying their rent. So does it mean that I need to pay that tax before I have actually gotten my rent? Yeah, because I might be paying rental income tax and I'm not gotten that income. I'm about to kick out that guy, you know?
Or if you have a rental property and say like half of it is occupied, half of it is unoccupied.
Yes.
And let's say maybe you say next year I'm projecting this amount. When KRA comes, they just see rental houses.
Yeah.
Also in this Nairobi that people put curtains to
You
let
know
people that this place is taken.
Yeah.
They then require you to pay rental. I don't know.
Yeah, that's I think a bit of a sticky situation for landlords in Kenya. And so probably one thing also on income tax we need to remember, withholding tax is also a big portion of income tax. So you have so the examples you had given, when you get your dividends, you will be deducted withholding tax. So the guys who do consultancy work, they're deducted withholding tax. So it's normally the company that you've given services that is supposed to do the remittance
So
on your
they
behalf.
give the money.
Yes, but you as the consultant, remember to file your taxes. Yeah, and then I think on our Instagram page we'll share the dates, like a breakdown of the dates when you should file each of the tax. Yes, so that you guys can know and remember and put them on your tax calendar. Yeah.
Yes. So the next tax.
Yes. So the third tax that is applicable to businesses when you're investing in Kenya is the capital gains tax. So capital gains tax is mainly applicable during transfer of property. So for example, your company or you as an individual own a building or a piece of land. So when you're selling it to someone, it will capital gains tax will be applicable to that type of business. Yeah, so you need to make sure you are compliant with that.
And you're cognizant of the fact that that capital gains tax has now increased, unfortunately. I remember this being a really big debate on LinkedIn. Around the end of 2022, where people were saying you cannot just balloon up tax like that.
I know.
People were paying, I think, 5% on capital gains tax.
Yeah.
Then by January 2023, we are at 15%.
Yes.
So a lot of conveyancing advocates and consultants were actually, conveyancing advocates are advocates that help with dealing with land. So they were advising their clients to make sure their transfers are completed by the 30th of December.
Yes.
Because as soon as you hit the 1st of January, then the capital gains tax goes to 15%.
So question, now that you've talked about that, is, for example, inheritance. So if I inherit a piece of land, will it be subject to capital gains tax?
Now, I remember initially, inheritances, gifts, and whatnot were not subject to tax.
Yeah.
I know even for the matter, maybe I've been helping my clients with tax, but the transfers that I have done with that are related to inheritances, I have not seen that capital gains tax. Maybe I've done that's non-compliant, but I've not seen that coming.
Yes. Okay, that's interesting. So if you know someone who has a piece of property and you guys need to transfer, inherit it. So yeah, I think those are the key areas where we have taxes that may be applicable to an investor in Kenya.
We forget, sorry, before we close, maybe we need to talk about excise duty or excise tax.
Oh, yes, yeah.
So excise tax, it initially used to be called sin tax. Sin is like dhambi. It used to be called sin tax. And it's because initially I think it used to be applicable on things like alcohol and cigarettes and things that maybe propagate vices.
Yeah.
But now the tax bandwidth has been extended to go to goods manufactured in Kenya, sometimes goods that you import and bring here, goods that maybe like juice. Like it's just, and currently, I know even on airtime and mobile phone services, and I think mobile phone transfers, you are charged excise duty. So again, you need to look at the kind of business you're establishing in Kenya. Is it a manufacturing business? Are you coming here to do a telecommunication business? Will you be involved in the telecommunication industry? Probably then you might be subject to excise duty.
Oh, yeah. Interesting. Yes. Also, I think another thing that we forgot to talk about was VAT.
Oh, yes, value-added tax.
VAT. So also you need to check the type of goods and services you're giving so that you can check if they are applicable to VAT. It's generally around 16% for most goods and services.
For legal services, we charge pay 16%.
Yes. Yeah, so that's, I think, a key area. So most of the time, VAT is normally pushed to the client. Yeah, so the client pays in their fees, whatever you're charging to a client, make sure that you charge the VAT percentage. Or if you would like to be a good business person, you absorb it. But either way, KRA will need that VAT.
And you see, I think that's why KRA have been really cracking down on the issue of getting people to get ETR machines.
Yeah.
Now we have clients who will literally like be on the phone and tell you, please send me the ETR receipt for that, so that when they're also filing their returns, they actually say, yes, we really actually did
exactly
the 16% we get it to this person, and they actually did receive the money. Yes.
So when you talked about excess duty, it made me think about betting tax.
Oh, yes.
Yes, maybe you can tell us a bit about it.
So betting tax is, I used to think betting tax is excise duty, but betting tax is not excise duty. Again, that's just, I think that's one of the major sin taxes that we have in Kenya.
Yeah.
So I know for a fact that if you win money on paper, I don't know how I'm not good at betting, so I don't know how the receipt, how the pay slip comes to you, but I know that they charge 20% on winnings.
Okay.
Like if you Ndanu won 20K, there'll be 20% that goes to KRA. I don't know if there's any other deduction that goes there, but I know for sure 20% has to go to KRA. Now, whatever people bet is what is called gaming revenue. So on gaming revenue, the tax is 15%. And I think there's another tax on it that is 20%, which actually brings it to 35%. So betting companies are at now 35% tax.
Yeah.
And then winnings is 20%. Let me just confirm what that 20% is.
That's interesting.
Stan, hold it. So we're going back to that betting tax issue.
Yeah.
So initially I told you there's 15% on gross gaming revenue. Gross gaming revenue is like any gaming revenue that the betting company has. 15% has to go.
Okay.
Then there's the 20% that is charged on the winner of the lotteries. Or the bets or whatever it is that the company decides to call it. So this one is withheld and remitted to KRA, because if they give you that money, most of us will not be as faithful. I know some of us don't even tithe faithfully. So you can imagine if it's betting.
Wait, why are you attacking people? Hey, tithe ni ngumu.
Tithe ni ngumu depending on your level of income.
Well,
That's a story
but
for another day.
interestingly, as it grows, for example, if you're earning $1 million a month, imagine KRA chapas you 35%. And then on top of that, you still have other deductions, housing levy, whatever, loan. And then now on top of that, you come and do your 10%.
Done. No salary.
Imagine.
Anyway.
But anyway, Pastor, we tithe.
Mom. Then now the rest of the 20% that I was talking about is usually levied on any wager that is placed to the betting company. So any wager that is placed, ukieka 5 bob, inakula 20%. Like whatever is placed as a wager, there's another 20% on it.
Okay.
And I think the reason why betting is taxed so heavily is because, like we said, it's a sin tax.
Yeah.
It's they try to, that's the only way they can say we are trying to contain it. But I don't think it's good for business, especially in Kenya, thinking about the fact that we know of one big betting company that was thinking of moving its headquarters to Tanzania because they thought they had better tax rates than we do.
That's true.
Yeah, but they still do make a killing. I mean, they're sponsoring Premier League teams. So
by the way, yes, still making some good money. But as you mentioned, we also need to think about what's the impact on the economy. Yes, when taxes are very heavy. Yeah, so I think something positive that we can talk about the taxes, tax incentives for investors. Yeah, so the first tax incentive for investors is capital allowance. So investors get some tax breaks on machinery and equipment that they buy, especially if they are buying them locally, then they get a capital allowance. Then the other thing is withholding tax. So foreigners get some tax breaks on withholding tax, like on royalties. Yeah, so there are also some tax incentives that you can think about, even for a foreign company or a foreigner that wants to come to Kenya. And even for Kenyans investing in Kenya, I think the capital allowance is also applicable for Kenyan businesses. Yeah, so that's also something to think about. And I think one of the things that we need to also remember during these tough economic times is we need to spend so that our economy can keep growing. If we stop spending, then we'll be constrained as an economy. Yeah. Yes, and I know the default setting for us as human beings is when the taxes increase, we fall back. Yeah, we're like, yes, we stop spending. And so you find, for example, if you used to take your family out every Sunday, now you're taking them out once a month. Now imagine what happens to the restaurants and the places that you go to. That is employment, that is. Probably people are losing employment or businesses are closing down. So we need to think about how to expand our economy even as the taxes are quite heavy on us. And
as the taxes are increasing.
Yeah, so we hope that Mr. President, you become a fan of our channel, for you to listen to us and please, urumie wa Kenya, tunaumia.
Even as you beg the president,
yeah.
I hope he doesn't see this part. But let's talk about like one of the common tax questions that come as we come to a close of our episode.
Yes.
Maybe you can give us the difference between tax evasion and tax avoidance. I know that's a hot topic for you. I can see you.
Yeah, hey. I think I should have mentioned my undergrad was in economics. I think that was one of the classes I was so excited to go and hear. What is the difference? Tax evasion and tax avoidance.
Please, wake up. What is the difference between, as I do this?
Tax.
Okay.
Yeah. So tax evasion is illegal. That's the first thing. So if you're deliberately evading taxes and looking for ways to cut corners in your business, so for example, if it's on your turnover tax, you're underreporting your turnover for the year, so your revenue. So for example, for companies, they're supposed to pay a turnover tax. Okay, so on all your gross revenue, all the sales that you make, you're supposed to pay a turnover tax. So if you don't pay or you underreport your turnover for that year, that is considered tax evasion, and you can be arrested for that. Now, on tax avoidance is technically not illegal. That's where you look for loopholes in the law and in the tax regulations to avoid paying some taxes or to get some tax breaks for your company. So, for example, we have business people who don't own anything in their name. Everything, their houses, their land, their property, their cars are all in the company's name. So that's what, so when they are paying their taxes, it looks like they own nothing.
Yes.
But basically, all the expenditure is under the company. So that reduces the amount of taxes that they pay. But there's a risk that comes with that. So the risk is if your company has a liability, then in the event that the company is unable to meet some of those obligations, then your property can be seized. So, for example, imagine the home that your family is living in, and they're kicking you out. So that's a risk that you need to think about whether you want to go that route or not. So that's up to you. Yeah.
Another good example of tax avoidance or creative taxation is what businesses are doing now, where you look at your staff members, and just to help cushion them, you look at their work profile and their skill set and their specialization, and look at it and say, okay, Ndanu is a risk expert. Can they do this job under the same allowance or professional fee as a consultant as opposed to as an employee? Then you say, I'll give you a 1-year consultancy agreement for you to come and let you sort your NHIF, your NSSF, NHIF, which is now something.
A whole other topic.
Like, I'll let you sort your pension, I'll let you sort all these bills by yourself. I'll give you a general consultancy fee that would be probably equivalent to your gross, and then you sort those things out. I do not have the obligation of declaring pay for you, and you do not have the obligation of paying pay to the government. What you do is you pay your 5% withholding, and you go home with your money. So a lot of businesses are getting into such creative contracts, and I actually like that for the Kenyan people, because it kind of cushions you against a lot of this, some of what would be really unnecessary taxation or heavy taxation.
That's true, and it actually also helps you to be flexible, and also it makes businesses have less of a headache in terms of their workforce. Because you remember, like during the COVID-19 pandemic period, a lot of companies had to reduce the salaries that their staff were on. They had to let go of some people, and even letting go of staff is also quite expensive for companies because they have to pay severance packages. So if they have their staff on a flexible contract, it reduces their obligations on some of those things, and also reduces the risk of having the company go down because of such heavy obligations that are due to that company.
That was it.
That was it.
Well, that was fun.
I know. We should do this again. Yeah.
So we do hope you really enjoyed our first episode of The Rundown.
Please subscribe to our channel. We are called The Rundown on YouTube, The Rundown on Instagram. Our personal pages on IG. My personal page is Ndanu Nzyuko.
Mikhala _Barasa. And it's been lovely giving this information to you. Don't forget, subscribe, like, share. Tell your friends to tell your friends. And until we see you next time, bye.